Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning, from the San Francisco Bay Area, we have an ex private equity investor and current founder and CEO of Wall Street Oasis joining us today. Please welcome Patrick Curtis. Patrick, thank you so much for joining us today.
Really appreciate it. Thanks so much.
And how are things with you over there in sunny California?
They're great. Surviving. Got three young little ones, so every night and every day is an adventure. But it's been great. It's been great. I'm happy that things are kind of starting to open up finally. So
I'm happy to hear that. Let's jump into the first question, shall we?
sure, let's do it.
Patrick, tell me about yourself and your background and how it led you to the path of founding a startup with over 650,000 plus members worldwide and now 65 million plus visits each year.
Sure. I grew up in Boston. Ended up going to Williams College in Massachusetts, and from there I started working in finance right out of school. So I did investment banking at Rothschild for a few years. And then from there, I joined a private equity fund in Boston and ended up getting fired basically within 3 months, which was kind of a shock and kind of a wake up call for myself. That experience, I think, really shaped me a little bit. I was lucky enough to actually have someone from my network actually vouch for me and help me get land on my feet and get a job in still in private equity. But I did have to go from Boston to New York, back to New York, where I had done my banking job, and I'd kind of wanted to stay in Boston, but I knew kind of to get back on track, I had to go back to New York. So I did that. I worked there for 4 years at Tailwind Capital. They It was a great experience, and I ended up applying to business school. But at that same time, while I was at Tailwind, I had started at the time, what at the time was this very small kind of online community focused on just investment bankers or people trying to break into investment banking. So initially it was called iBanking Oasis. Several years in, we decided to change the name to Wall Street Oasis since it was a little bit more applicable to a wider range of potential users, since we had people on there talking about private equity, hedge funds, asset management, VC, and so we didn't want to just make it feel like it was only for investment bankers. So that was the impetus. It was not some grand scheme. I think a lot of it was luck. A lot of it was timing. This was back in 2006, so we're approaching almost 15 years since we founded Wall Street Oasis. So I think in terms of how and why we did it, it was really as simple as me calling up a friend of mine who was getting his PhD at MIT at the time, saying, "Hey, could you help me spin up a site? I want to start a business, but I'm not. The only thing I really know is investment banking, and that's all I've done. So maybe we could do a fun kind of community with a monkey theme, and have it be just for prospective bankers and bankers who are young in the industry. Make it actually fun instead of a dry kind of publication. So that's what we did, and that kind of the rest is history."
So, Patrick, what is WSO trying to change? What do you kind of envision it to be in the next 5 years, and how over the last 15 years has it kind of evolved?
Sure. So, in terms of what we're trying to change, the main thing is just access and democratization a little bit of information. So, I've been told countless times, I think it's really humbling that when I talk to people today that are associates, VPs, MDs, they said they used Wall Street Oasis back when they were in undergrad at a non-target school and they had no idea what investment banking was, and it really helped them kind of build a foundation of knowledge that was necessary to compete to get those highly coveted jobs. So I think in terms of what we're trying to change the access to these jobs and the knowledge of how to gain these jobs, position yourself to actually be successful in these job searches. I think we've been very successful in doing that, but I always think we can do more. There's still a very, very wide um, gap in terms of who even knows about these positions. We still have, and actually, we have certain trends that are working against us. So, for example, investment banks have started recruiting earlier and earlier and earlier in undergraduate. So if somebody comes to college nowadays, if they know they want to do investment banking or finance in their first year, they're actually at a huge advantage versus someone who's exploring and people tell them, oh, you're at a good school, don't worry about it, you have time. Sure, you have time and you could, of course, break in your junior year once you decide, hey, this finance thing is interesting, but it puts you at a distinct disadvantage, especially if you're not at one of, what people call the target schools. So for us, it's really about making sure we keep disseminating knowledge, making sure that the community does all of that work for us. I mean, it's 95% UGC, user generated content, that's promoted on the site. So the users themselves are really the ones that are helping get this information out there, disseminating information. So in terms of what we're trying to change, it's really about giving access and giving the tools for people to help improve their chances of breaking into these competitive careers from students and from backgrounds that would traditionally never even have a chance or even know what it is. And secondly, it's trying to give them the tools to succeed once they're on the job. So that includes financial modeling training. That includes, we have interview courses. That includes resume review services and mentor services as well. In terms of what I envision it to be in the next 5 years, that's really we really want to double down on doing more of the financial modeling training, and that includes live public boot camps. That means doing more corporate B2B training within the companies once things go public again, um, and then continue to sell into B2C to students that want to kind of develop these skills from non-traditional backgrounds that are trying to gain an edge in their recruiting. So and we also have a financial aid program as well. So we give very generous aid to people who demonstrated a need. Yeah, in terms of how it's changed over the last 15 years, really initially the community itself was really just a forum. And so over the years, it's evolved to be not just a forum, but also giving you the resources and the tools needed to succeed to break in. So um, I think it's changed over 15 years in the size, obviously. In the first 5 years, it was probably, I think, probably under 100,000 users. And then now we're actually up over 800,000 members and, doing over a million visits a month and over 5 million page views a month. So in that sense, it's evolved in the scale and the size of the number of people it's reaching, and it's evolved in the sense of the types of tools we're offering and the types of services we're offering to that community to help them kind of break in and thrive in those careers.
So, Patrick, let's unpack this a bit. So as you kind of alluded to earlier, right, you have about 65 million plus worldwide web page visits each year. And you also have mentioned that you have this, financial modeling course, these resume reviews, workshops, etc. How are you tailoring your product and service to maybe international clients?
Well, I think we do have some of our biggest cities are Singapore, Hong Kong, London. Well, London obviously English is the first language, but Singapore, Hong Kong, um, and other international locations. So it's we honestly don't have the scale to be able to offer, mentors in every single language. Although what I will say is we have now over 800 mentors and resume reviewers in our network. So a lot of them do speak other languages besides English. So we have, for example, we have investment bankers in Paris, in London, in Munich, and you name any sort of major hub. I can guarantee we have at least one, if not 5 to 10 finance professionals in those cities that can serve as mentors or as resume reviewers for that specific market. So that's allowed us to scale more internationally, not just in New York and London, but um, anywhere from Sao Paulo to Hong Kong and Singapore as well.
And as a social media forum, similar to Reddit, but for financial services in a way,
Mhm.
what are some of the issues you have faced when it has come to user privacy and ethicality?
Yeah, so WSO has always been a forum that has been anonymous, and anonymity has been kind of one of the foundations of the site, and the reason I think people feel comfortable sharing what they do on the site. And so we've not only is there are the usernames you can create anonymous, but there's also a second layer of anonymity that we've added actually fairly recently, where people can even post um, anonymously outside of their username. So what that means is not only is the username private, but they can actually post, they can make a comment or a start a new discussion anonymously as well, not even tied to their username. So we still have to tie it back to the user account on the administrative side to make sure that violations are tied back to users. So we know if people start making a bunch of anonymous posts that are violations, um, they will be moderated out and they'll be warned to stop. But in that sense, it allows a lot more kind of free flowing conversation, honesty about what they're experiencing, and we've seen that a little bit recently with some of the analysts coming out and kind of being really frustrated with some of the work conditions they've had for work from home, and that's at all the bulge bracket banks. We saw the Goldman survey come out, but that's UBS now is seeing a similar kind of trend, and all these banks are kind of experiencing that. And I think WSO really serves as a platform for them to kind of voice those concerns and try to make some change. Um, Although I think I can tell you there's a lot of skepticism around that. So in terms of like moderation and stuff like that, we have some automated systems. So new users that get flagged by the community will automatically be blocked and removed. And it's not perfect. We do get people that are just get flagged inadvertently that we have to re-enable. But for the most part, it catches a lot of the bad actors in the community. So the community helps us kind of self-police the community itself. In terms of, there's of course a lot of spam that's always trying to come in the forum. So we have certain systems in place to help us prevent that. And then in terms of ways for people to develop trust of who's giving them advice, we have a certified user system, which what that means is for specific users that have sent us their information privately, we will actually certify their account so that if what they say on their profile, so for example, let's say there's a private equity principal or private equity vice president in the forums contributing, doing a Q&A or contributing just in the forums, and they email us to get certified, we can tag their account such that people in the forums know that the person behind that account is actually a private equity principal. So there's what we call the certified user program that really helps, I think, build a lot of trust around that the advice that they're getting is coming from a not a high schooler, but an actual professional.
So, Patrick, I really want to unpack this one part of the conversation where you really spoke about, these 13 Goldman analysts, right? Talking about how they're working 95 plus hour weeks and how it opened up, the true investment banking or just general banking industry to the rest of the world. What are your personal thoughts on this? And do you really see an actual change coming along?
I tend to lean a little bit more on the skeptical side for the simple fact that we have seen, at least I've seen this for countless, since the beginning of Wall Street Oasis. This has always been the culture of Wall Street and of investment banking front office specifically. It's a client service. It's a client service business. So what happens is when the client wants to have something, in a few days, suddenly the MDs from the top down put a lot of pressure on the junior team, and that's including the VPs down through the analysts to produce a perfect pitch deck with error-free models, error-free everything, just because there's so much at stake. So it's a sales-oriented business. So you're either pitching to clients new ideas, so there's or you're working on a live deal. In other words, there's unlimited amount of work that can actually be done. So what happens is um, if there's no protections in place for junior staff, what ends up happening, everything from if you put yourself in the seat of an analyst, everyone from the associate to the VP to the director to the MD is feeling a lot of pressure. The MDs are feeling pressure to generate enough revenue, please their clients so that they get the next mandate. The VPs and directors are feeling, or the VPs are feeling pressure to try and assert themselves and show that they can sell to new clients and that they can manage a team well. The associates are trying to prove that they can do VP level work and can also manage a team. And then the analysts are just trying to survive because they're at the bottom of all of that. So it's a very even with a pyramid structure where there's a lot more analysts, it still can create a mountain of work and a mountain of stress and conflicts if there aren't certain protections in place. And I know the banks have made several efforts to try and combat that with protected Saturdays, with pencils down, with all these different programs to try and give at least some visibility to the junior bankers in terms of when they can be out of the office or when pencils down are or certain days off. But the reality is those those are not always enforced, and it's hard to enforce them because let's say you have an MD that's bringing the bank, 10 to 20 million dollars of fees each year. Are you really going to tell that MD, hey, stop making your analysts work 80, 90 hours a week? It's tough because that's, the bank is also under a lot of pressure, the CEOs and the senior leadership, and it has to come from the top down or nothing's ever going to really change. So I'm a little skeptical. I think some of the implementation that they did several years ago, and by the way, I don't know how well versed you are in this, but a lot of these changes in these programs that got put in place were because there were a lot of deaths, high profile deaths on both the intern level and analyst level about 6, 7 years ago, and both at Bank of America and I think a few others. So that kind of prompted the banks to at least uh, put something put something out there, that would try to get a little bit more protection. But I think it has been successful in some cases. Whether that success or that efficacy has eroded over time, my guess is it probably has. Maybe this will be a little bit of a wake up call to try and kind of reinforce some of those protections that were put in place.
Why don't they just hire more analysts?
Yeah, I think it's a great question. I think if you asked any analyst, they would be more than happy to lower their compensation to actually have more help. I think the problem is the nature of the work doesn't make it so that there is like there's not a set amount of work where if you have more analysts, suddenly the hours dramatically go down and it's just split evenly. It doesn't work like that. If you have more analysts and there's capacity, guess what happens? The number of pitches goes up because
Right.
you're trying to win more business. So like, yes, on the margins, it will improve things if there are more analysts. But what we've seen over the last 15, 20, even 20 years is there's been an increase in attrition at the analyst level as well. So that's just putting even more pressure on it. And then COVID and work from home situation made it even worse. So what's happened is I think the average tenure of an analyst back in 1996 was about 2.5, 3 years. And I think it's down to like 14 months now. So you have a lot of analysts leaving. It's 6 months, 8 months, right after bonuses, 12 months. A lot of people leave after that first year now. And so, let's say you have an analyst class of 20 students coming in. By the end of that 2 year, what's considered to be a 2 year contract, you could be down to like 6 or 7. And that's a the problem is as more and more leave, it begets more and more stress on the remaining six, or the remaining so we call them soldiers, the remaining soldiers standing there working, 9 a.m. to 5 a.m. So like that, those types of hours, those all nighters kind of become much more common. So it kind of ends up kind of almost like a vicious cycle, pushing more and more people out. So yeah, it's a good question though. I think it's there's no easy solutions here.
So, Patrick, how has working from home due to COVID changed the ball game for analysts? Are they getting more stressed? Has it made it easier for them?
It's been overall, especially for first year analysts, it's been really, really horrible, in the sense of they haven't been able to develop meaningful relationships. They haven't gotten the camaraderie that happens in the bullpen that makes it a little bit, the long hours a little bit more tolerable. There hasn't been they haven't been able to get that separation of, the 5 to 7 hours they do get outside the office every day. They haven't been able to separate that and at least feel like they're getting a break and stepping outside the office, since the office is now their home. I'll say for second year analysts, I've heard from some that it's actually a blessing because they are now at that point, they have the relationships. Um, Work from home has allowed them to be, they're already much more efficient than their first year peers. And so I think when you say, is work from home good for analysts? I think it's a huge difference between first and second years. The second years that had that in-person experience, I think, by and large, um, have actually, some have actually enjoyed it. What I will say is because deal flow has been so high, and that's a lot. Just debt capital markets, ECM, everything is just, the markets are just crazy right now. Because of that, I think even the people who do prefer work from home have been stretched pretty thin in terms of number of hours worked, and that goes from analysts through associates. The associates I talked to over this past year, I talked to one guy who had worked. I think he hadn't had a day off since COVID really took hold here in the U.S. Not one day. So that just goes to show you, and he was doing some incredible deals, some like really high profile deals, but it just goes to show you that they were, even without taking any days off, they're already like so busy that they can't. They're already missing mandates and probably having turned down stuff because they just don't have enough staff.
And Patrick, what piece of advice would you give to, I guess, analysts out there or people who are interested in getting into the space? Would you just say, hey, if you want to make the most of your career in finance or get into a very high level career in finance, would you just say, hey, go straight into private equity, or you need to do the 2 years of investment banking or go into management consulting? From what you see, right? I think many people maybe don't have this insight that you have, right? Because you run a forum that just discusses this every day for
Yeah.
the last 15 years, right? What is your advice to a college graduate that's graduating and trying to enter, but also an analyst that is switching into maybe a different industry?
Sure. I think if you're going to be joining a private equity fund straight out of undergraduate, you want to make sure of a few things. Number one, you want to make sure they actually have a training program for you that's going to help you kind of develop that foundation. So that means, financial modeling training. That means thinking like an investor. Things along those lines where you're not just left alone. I would probably warn against joining a smaller private equity fund, let's say 500 million or less, just because they are unlikely to have the infrastructure to be able to train you and to give you that support and mentorship that I think is valuable early in your career. So it really depends on what fund you're talking about. The other risk of joining these small private equity funds is oftentimes college kids don't know what to ask in terms of um, trying to figure out if the fund is actually the right place to start. So what I mean by that is oftentimes these partners are very good at talking up the fund performance, and they say we're raising a new fund and it's going great. We have 700 million locked up, but really it's risky to go to or like it's a brand new fund. It's risky. It's risky, especially coming out of undergrad, to go there because you don't know if the fundraising suddenly turns south. There's no position for you, or if let's say the returns aren't as great as the partners are making it out to be, and suddenly there's a high profile bankruptcy, and all of a sudden they're not able to raise that next fund. That's a big deal. That can really derail your career. It almost derailed mine. And so I think you need to be careful about saying, oh, go to IB or just go to PE. There are investment banks out there that do have a little bit more reasonable work life balance, that do actually help you actually break into the buy side. So they're not all are created equal. And I'll put a little plug in for the WSO company database. There's a lot of statistics in there on work life balance. There's a lot of statistics on um, not just pay, but just in terms of what to expect in terms of support from seniors and trying to transition out and exit opportunities. So not every bank is equal in terms of how much they work you. Not every private equity fund, I think, would be a good place to start out of school, especially if you're coming from a background like I did, like a liberal arts background, where that getting that kind of finance heavy training and reps is actually really important to kind of, if you really are serious about building a career in finance. So if you're like a Wharton finance major and you're offered a top private equity fund or you know job right at a school at a Blackstone or a KKR, yeah, sure, go ahead and take it. Why go to 2 years banking? Just go do that. I'll also warn those mega funds tend to work their kids pretty hard too.
So, Patrick, when looking at bulge bracket versus boutique banks, what are some of the advantages of working with one versus another? For example, I've been told analysts at boutique banks uh, are closer to the deals and get more exposure.
Yeah, so I think it's a good question. So investment banking boutiques can sometimes give the analysts more exposure. with smaller deal teams where there's more expected of the analyst earlier on to carry their weight and do more of the financial modeling and the valuation work. Um, that being said, I think it's really more important to look at the specific group you're going into. So that means, you know, XYZ bulge bracket um, isn't necessarily better than a tiny or or middle market bank that has a really strong group, or even a boutique that maybe only has 20 bankers, but they do a ton of deal flow. I mean, that would be a great place to be right out of school. So at a bulge bracket, you're going to get a lot of best practices. You're going to get more hand holding. There's going to be larger deal teams, and so yes, you might not get as much experience, but you're going to have a stronger brand on your resume, which can help you with exit opportunities and the like. At the boutique, if you're getting good deal flow, you may have a lot more to talk about. So I think most important is that you're getting reps and that you're getting on live deals. That should be like the number one consideration. And so it's important to look at the deal flow of that specific bank and specifically what group you're getting placed into. And so as much visibility as you can get into that prior to accepting an offer is, I think, actually much more important than the exact um, the exact name. Of course, if you're looking at like XYZ mom and pop bank that has like one person with great, not great deal flow, and then you're looking at Goldman Sachs, obviously you take Goldman Sachs over that. I'm talking on the margin here.
And Patrick, I know we'd kind of gone off on this tangent in regards to, the investment banking and the finance space in general, but bringing it back to Wall Street Oasis to wrap up the call with the last couple of questions here.
Sure.
It seems like, WSO is one of the very few startups out there that has really never taken funding from a venture capital fund. And you've really had a great year on your growth. Can you tell us a bit about this journey, really, and how you turned something from nothing into a several $1 million revenue business?
Yeah, so I think it's important to realize, we've been around for 15 years. So for a 15-year run, it's not that impressive. It's actually just, step by step, making incremental improvements. And I think what's more impressive isn't the size of the business. I think what's more impressive is the size of the community and the reach of the community. And so that is, I think, something that was largely due to, yes, hard work and persistence and all of that, but also a little bit of luck and timing and just making and hitting on just enough early users to get that kind of flywheel going that allowed the community to stay active. And I think that's the hardest thing to create. I don't think the business side of thing has been optimally run. I think it's well under monetized given our reach. Um, but yeah, in terms of just needing venture capital or not, I mean, if I needed the funding and I felt like it was paramount to help the community, I would get the funding. But it's not something where I feel like it's even investable at this point, right? It's growing, anywhere from 10 to 40% a year over the last 15 years, and so it's just been a steady climb, step by step, depending on kind of what we're releasing that year and obviously other factors like organic search traffic and paid traffic, all that good stuff. So um, yeah, we've always run it lean. We've always run it with the thought of it's better to be to be careful, cautious, really thoughtful around what we're offering to the community, and not try to just overextend and have delusions of grandeur of how big this company can be, and instead be smart about it, and don't hurt the community. Let it run and play its course. So that's what we've done.
So, being a startup founder with over 15 years of experience under your belt, right? Truly a veteran in the industry. Um, what are some of the biggest challenges you have faced and how have you overcome them?
You make me sound old, man. No, just kidding. No, yeah, I have the gray hair to show for it. But I think I think the most difficult challenges are really just trying to think through the business in a way holistically. I think one of the challenges, kind of ironically for us, has always been paid channels and understanding how to grow a business outside of organic traffic. We're blessed with so much organic long tail traffic that it kind of, I think it stunted our growth in the sense of learning how to do digital marketing properly. Like we were blessed with such an active community that there was almost never that pressure to build up revenue through the traditional funnels you see of like, okay, we're going to pay and look at our CAC and look at our paid channels of Facebook, of Instagram, or whatever it should be. So we're a little bit less mature on that side of the business in developing those paid channels. And so I think, for us, I think the biggest challenge is just not knowing what you don't know. And I'd never started a business before this, and over the years, I've learned many times that I had made huge mistakes for many years before realizing it. So I think it's just being able to kind of get up, not blame yourself, and just keep trying to be the best you can be each day, so that you keep going and try to make do good, get a ton of value for the users and make them happy.
Patrick, for people out there who are interested in maybe catching a cup of coffee with you or connecting with you, what would be the best point of contact?
Probably either LinkedIn, or you can hit me up there, or you can find me at patrick at wallstreetoasis.com.
Perfect. And thank you so much for joining us on Geeks of the Valley.
Awesome, Kunal. Thanks so much for having me. Really appreciate it.